Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I'm not sure, but my pointer is not working for some reason. But with the election about a week away, I'm expecting a pickup in volatility. And so I'm tightening some of the stops on my buy recommendations. And we got stopped out of uh, national retail, the Reits with the symbol NNN with a 9.93% gain to Friday, which I just posted tonight. And so with that, let's get into it. Okay, the first buy recommendation that's still intact is the United States Copper Fund, CPER. And the big symmetrical triangle that we purchased back in March of 2024, it got up to our price projection way up here at about 31 and a half. We went to a neutral rating, tried to get back involved, uh, excuse me, unsuccessfully, got stopped out down here. And now I've issued another buy recommendation slightly higher than that. And the big picture on a monthly chart, which goes back several years, copper looks like it could really explode to the upside. But on our weekly chart, which we're looking at now, we have a potential inverse head and shoulders pattern here with the left shoulder, the head, the right shoulder possibly forming currently. And so that's where we are on copper. So still bullish. Haven't placed a stop yet, but I will be shortly in the next couple of days. Platinum, again, remember on some of my previous video updates, I've suggested that commodities are going to continue to outperform stocks. That's not without a lot of risk. Commodities are very volatile, but the patterns are suggesting higher prices on their own merit. So we're going to go with those. And platinum is one. So, we have an inverse head and shoulders pattern on the daily chart, 5 months in the making, which is now intact. Left shoulder, head, and I talked about the fact that we could be forming a right shoulder, and that's exactly what happened. Here's our neckline. We broke out. Oops. And so the suggested price projection based on this pattern is 104. And even with this big move up, we're not overbought yet on platinum. So things still look like they're going to push higher. And, while 104 doesn't sound like a whole lot, if we do get to 104, the bigger pattern, so this is only a 6 month pattern. If you look at the 1, 2, 3, 4 year chart, you have a huge potential, and I stress potential, symmetrical triangle. And if we get to 104, that's going to push this through the resistance line of this large pattern and will generate a buy signal on the weekly chart. And that gives us a price projection of 144, which is a long ways up. So platinum looks great. We haven't raised our stop yet on platinum either, but I will be updating that shortly, certainly within the next week. Gold miners, again, this fits into the commodity theme, and this is one that I initiated with back in like April, early April, when it broke out of a 1, 2, 3 year inverse head and shoulders pattern. Left shoulder, head, right shoulder. It broke out. The price projection is 50. It's gotten up to 44, so it should still have another push higher. Actually, our negative divergence here has been rectified as we have a little bit of a higher high on our RSI than the last high. So this has been rectified. We got a stop way down at 34. I'm going to be lifting that also. So stay tuned. Marathon Oil, energy has been a struggle. So not only has crude oil been a struggle for me, getting stopped out twice with losses, the energy stocks are hanging in there better. And one of those is Marathon Oil, which I initiated with back in March. And the suggestion here is that we have a 41.50 price projection, which is a lot higher than where we're at currently. And we're coming down and we're testing our support area, and we're not too far away from our stop, but it still looks good. It's hanging in there, and that's so the buy recommendation remains intact. The reward to risk at this level is very, very attractive. So, if it goes below 25, you're going to get stopped out. But if it doesn't, the potential on the upside is pretty big. Also, in the energy front, XLE, the Spider Energy ETF. And again, you've got a big ascending triangle, a flat top, and the ascending support line. And you can see we initiated, oops, God, sorry. We initiated on that in September, and we're a little bit lower right now. But again, the reward to risk here is very, very favorable. China, as usually as oil goes, so does China. But here we have again another inverse head and shoulders pattern breakout here at 30. Price projection of 39. It got up to 37 and change. And now we've had a correction. You can see I've raised my stop way up to 30, and that will protect our gains, which we got into this trade back at approximately 27, 14. And so with a 30 stop, that will guarantee us a gain. I still think there's another high coming. You can see we have no negative divergence on our RSI. Looks good. This, as I pounded the table on at the end of last week, to buy more on this dip. I still would say that. Alibaba, same thing. It's not an ascending triangle, it's a symmetrical triangle, and a lot more upside suggested by this chart. So we'll see. I will be probably raising my stop. I haven't yet. Baba's been a little more volatile than the overall FXI Chinese large cap index. So this looks good too. And a new recommendation that I came out with very reluctantly, but the pattern looks so good and the upside potential so large. This is Tencent Holdings. This is the a Chinese internet, AI, etc. Conglomerate. And again, this is a very nice ascending triangle, and the price projection is 81. Um, I initiated on October 18th at 55.04. We're down slightly from there, but I'm reiterating my buy. What I don't like about this particular recommendation is that it's a small cap stock. In times of potential volatility, you'd rather have large cap stocks, but this chart was just too good to say no to. So there we are. I've raised my stop from 45 to approximately 50. Two REITs left. The iShares U.S. Real Estate ETF IYR is still intact. It's consolidating here. I now have my stop way up at 98. Here's where we initiated back in July at approximately, that was on July 5th at 87.52. So again, I'm not going to give these too much room with the election coming up and potential volatility spikes. American Homes for Rent. This has been the most volatile and challenging. I think I've managed this pretty well. I've raised my stop now up to approximately 37. I certainly wouldn't want to see it at 36. I'd take my small loss and move on. but there's a lot of upside right here. So if you sell national retail, maybe you want to add some to American Homes for Rent or the broad-based REIT ETF IYR. Last but not least, again, a new recommendation of a couple of weeks, and it's the iShares NASDAQ Biotechnology ETF. Again, a nice big pattern, well, about 2.5 years in the making. And you would say this is an ascending triangle with a flat resistance line, which is now support, and your upward sloping support line. And you can see there's a big consolidation going on there, and nothing's changed much here. It's kind of been grinding up and down, and I've been actively trading that. So if I get IBB up 2% in a day, I sell a little bit, and then when it goes down, I buy more, and I build my position that way. I really suggest that on all of these. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Please, I do give intraday updates that you'll get notification of right away. So thank you. Have a great evening. Good trading to you tomorrow.